When we talk about investments, there are multiple options for us. But what do you think will be the best investment in 2024? Gold, real estate, or stocks? Last year, Americans chose real estate over gold and stocks. But what about this year? What are the odds this year? Who is going to win among gold, real estate, and stocks? Intro. Alright, here we go. Oh boy, if I had to make a guess about the future, I'd totally put my bet on stocks racing to the front as the top investment pick of 2024. The market's buzzing energy and the awesome potential for returns, mixed with all the cool new innovations and super upbeat vibes, are setting us up for some seriously exciting times ahead. Presentation of problem or challenge. But even with the best technology, forecasting the optimal investment option during economic uncertainty and market volatility is a complicated problem. Due to unforeseen circumstances and events, even the most experienced finance experts are not able to predict the movements within the market with 100% accuracy. In 2024, the problem is between equity, debt, gold, and real estate. Equities are poised as a favored asset class due to their historical track record of producing high returns, which can be linked to positive global and domestic outlooks. However, navigating uncertainty demands careful consideration of issues such as lower inflation, monetary policy changes, and crude oil prices. Investors seek a mix that not only provides strong profits but also protects against market volatility. Gold, seen as an asset of security, is gaining popularity, with some investors showing confidence through online or direct purchases. The metal's attractiveness stems from its perceived value during periods of economic uncertainty. Meanwhile, bonds and debt funds provide alternatives with higher interest rates than traditional bank deposits. The dynamic landscape requires a sophisticated approach, with investors being recommended to carefully adjust their asset mix in the light of the changing economic scenario. As uncertainties persist, a diversified and well-informed investing plan becomes critical for addressing volatility and ensuring optimal returns in 2024. And to make sure that, as an investor, you make adequate returns, you need to do proper research and analysis. Exploration or development. Let's start discussing each asset class one by one, starting with gold. A variety of factors will influence the gold quest and its consequences in 2024, with the precious metal seeing significant market volatility. The year began with a historic high of $2,198.54 per ounce on December 3, driven mostly by prediction of interest rate reduction. This spike was fueled by gold's intrinsic attractiveness as a non-interest-bearing commodity, which became increasingly appealing in an environment of falling yields on traditional safe assets such as cash and bonds. Although the price later fell below $2,000, industry insiders are still hopeful about gold's future. As of the time of writing the script, gold is trading at around $2,046 per ounce. Despite recent volatility, gold is expected to have its greatest year since 2020, demonstrating its resilience and long-term value as an investment. The favorable view is based on the belief that interest rates have peaked, with both Fed funds and real yields expected to fall in the near future. The pricing patterns of gold denominated in dollars demonstrate an intriguing interaction with global currency developments. As the Federal Reserve considers rate cuts and the dollar declines, gold becomes more affordable relative to other currencies. These phenomena are projected to draw buyers, particularly from crucial countries like China and India. The estimate for 2024 predicts a potentially difficult road to a new record high for gold. Central banks are expected to play an important part in this narrative, with continued gold stockpiling expected. World Gold Council predicts that central banks contributed considerably to the current year's 10% increase in gold prices, implying that this trend will continue in the future. Gold is seen not only as an inflation hedge, but also as a diversification strategy during difficult times. Geopolitical dangers, currency disputes, and global inflation fears make gold an attractive investment option. While returns may not be the best, gold's inherent safety makes it an excellent choice for portfolio allocation. The long-standing tendency of central banks to diversify away from the US dollar, spurred by continued geopolitical threats, is projected to maintain gold's relevance in 2024. On the other hand, real estate requires this same informed decision-making to get desired returns. A thorough awareness of market dynamics, trends, and regulatory intricacies enables investors to successfully manage the complexity, discover growth opportunities, and mitigate dangers. Real estate investment provides a trio of benefits. For starters, its historical resiliency assures that property values rise, particularly in desirable places, guaranteeing significant long-term profits. Second, real estate provides a consistent income stream through rental payments, assuring stability and the possibility of growing earnings over time. Finally, significant tax benefits and incentives associated with real estate investment, such as depreciation deductions and lower capital gains tax rates, help to reduce overall tax liability, making real estate an appealing and profitable option for long-term financial growth and security. Real estate investing has both advantages and disadvantages. The market sensitivity to swings caused by economic indicators creates dangers, as downturns can result in lower property values and rental demand, potentially resulting in considerable losses. The significant upfront capital required, combined with continuous expenses such as property taxes and maintenance fees, serves as a barrier to prospective profits, particularly during economic downturns. Furthermore, the lack of liquidity in comparison to other investment options slows down the selling process and exposes it to market volatility, limiting quick access to money and flexibility in reaction to changing financial demands or strategies. Determining the suitability of a real estate investment requires a thorough evaluation of financial objectives, risk tolerance, and commitment. While potential benefits include long-term financial gain, constant passive income, and tax advantages, issues such as upfront costs, liquidity constraints, and time commitments for property management. Overall, real estate investors must have a well-informed and measured plan in an ever-changing market scenario. And at last, we have equities, or what we call stocks. Despite the cautious expression that characterized much of 2023, a significant shift occurred near the close of the year, fueled primarily by the U.S. Federal Reserve's announcement of a possible interest rate reduction in 2024. This shift in viewpoint resulted in a strong surge, notably in November. However, economic estimates for 2024 predict a deterioration in the U.S. economy, with growth from 2.1% in 2023 to 1.4%. Given this, experts predict a hard year for sustained and rapid growth. Investors should tread carefully since macroeconomic headwinds in Europe and high valuations in the U.S. stock market make those regions less appealing. However, optimism is expressed for Asia and emerging countries, where stocks trade at a big discount to developed markets. Despite its limitations, China is seen as a region worth exploring. Despite increased valuations and other hazards, experts recommend that U.S. stocks remain a primary portfolio position. The green transformation, renewable energy, and energy storage sectors, which underperformed in 2023, are viewed as possible comeback themes for 2024, benefiting from lower finance costs and ongoing efforts to mitigate climate change. However, questions have been voiced regarding the outlook for U.S. equities profit growth and the S&P 500's heightened concentration, particularly in the technology sector. Economic statistics in the United Kingdom are likely to fall further as interest rates rise, potentially affecting company profit margins. Despite the obstacles, UK equity prices are seen favorably, with the FTSE 100 index, famed for its defensive traits, performing well in the face of global economic uncertainty. The index's exposure to defensive sectors, combined with excellent prices across many sectors, make it a viable option in the uncertain scenario of 2024. Climax or key moment. We have compiled a summary of the advantages and disadvantages of each asset type, as well as their wealth multiplier impact across all segments and markets. And after analyzing everything, stocks emerge as the winner of the 2024 wealth race. Conclusion or summary. The returns from equities are consistent with a high-growth investment plan that emphasizes a 5-year or longer time horizon. While real estate is a tempting alternative with the potential for financial gain, appreciation, and tax benefits, its complications such as market volatility and liquidity limits necessitate a cautious and informed approach. Gold, which is typically thought of as a store of value and an inflation hedge, is still included in diversified portfolios, but prudence is urged. Financial experts recommend keeping gold assets at no more than 10% of the portfolio. Additionally, working with trustworthy gold dealers, particularly those situated in the United States, is critical to ensuring a secure investment. Thorough research, strategic risk management, and alignment with personal financial goals are required to successfully navigate the wide range of investment alternatives in 2024. CTA. Well, that's all for today. If you liked our explanation, hit the thumbs up and share your views in the comment section below. Also, don't forget to subscribe to the channel for the latest financial trends and ring the bell icon for regular updates. Thanks for watching. See you in the next one.